So you're probably thinking, how do I pay a large personal loan if I have low income, I have no job, or I don't have a steady paycheck, right? Well, in today's conversation, I'm going to explain to you what exactly you need to do to pay off a large personal loan with low income or with no job or a steady paycheck. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as splendid as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's convo, I want to quickly give you a proven methodology, a proven approach to reducing or even paying off a large personal loan, even if your personal financial situation is not rosy. In other words, you have low income, no job, or not a steady paycheck. Okay, but before we get into the actual step-by-step, I want to explain to you, we need to actually go back and explain what causes large personal borrowing in the first place. It's very important to understand, because if you don't understand the cause of something, you are bound to repeat the mistake. So we need to establish the causal relationship between large indebtedness and spending. Okay, so there are a lot of reasons that push people to become, I would say, indebted or over indebted. First, you have low income. Then you have bad budgeting. You have divorce. Tell me about it. Divorce can be a great, could actually cripple somebody's financial situation. You have people who depend on credit cards. In other words, they don't spend cash. They're constantly borrowing. They're tapping onto their credit card, their credit line to live or survive. You have gambling. Gambling is a destroyer also when it comes to financial solidity. You have illness. Unfortunately, we live in the United States where if God forbid you get sick, and you don't have the proper health insurance arrangements in place, you might actually get indebted. Some people get indebted because they have little or no savings, lack of financial communication, spending future money, right? People actually spend thinking, oh, I'm getting a bonus next year, so I just need to spend the money now, either through a credit card or through another arrangement. And then people actually get in debt because they don't understand the basics of debt management. They don't have basic personal finance education, because nobody teaches you certain things in school. No, you go to school. We all went to school, right? Have you ever learned any personal finance classes in school? At least I didn't. Okay, so here is the constellation of reasons that make people actually become indebted. If you understand the causes, then you are bound to at least avoid them, so you don't get indebted, that you don't have a large debt over your head. Okay, now that I gave you the reasons what causes people to get in debt in the first place, and listen, your situation might be different. I'm not actually trying to generalize here, but I'm just giving you the context of today's conversation. Now let's talk about the actual step-by-step. Why you're here. How do you pay off a large personal loan with low income or with no job or steady paycheck? First thing you need to do, get your numbers right. What do I mean by that? You got to have a clear idea of how much you owe. So I want you to take a piece of paper and write down all the loans you have. And you want to categorize the loans, you want to rank them so you can see clearly the largest of the loan, the highest of the loans. You need to know what the monthly payment on that loan is. You need to know the APR and other fees. This is really important because when you pay a debt, the APR is just a primary fee. You have other ancillary fees such as prepayments, origination, NSF fees, and so on and so forth. So you have to have a clear idea of what the fees are. You also need to understand what your monthly budget is, your overall monthly budget, and the portion of your budget that you allocate to debt repayment. That way you have a clear idea. It's very important, and I'll tell you why. If you have your monthly budget and you're able to carve out a certain percentage to repay your debts, you will have a better idea of your DTI. What is DTI? Debt to income ratio. Basically, it's the portion of your money, the portion of your income that you allocate to repaying debts. Now, experts are the consensus among experts is that you need to have a DTI at 33% or lower. Sometimes you can hear people say, well, you got to go to 40%. I say you need to have a DTI of 33% or lower. And this is very important because once you have a DTI that is above that, then you know we are in trouble. Okay. And you also need to have an idea of how much income you earn every month. Remember, we're talking about people who have no job, low income, or not a steady paycheck. In other words, you have a paycheck that oscillates, income that oscillates every month. But you need to have an idea. What you want to do is you want to average it out. You want to average out the income. So you take the last 12 months and you see how much you made, and you just divide the number by 12. That way you have an idea of the monthly income that you can rely on. And you also need to think about whether or not you can save part of your income. What portion can you save, if at all? So step number 1, get your numbers right. Step number 2, you need to create a personal financial statement. When we speak about personal financial statements, at least at the personal level, we only speak about 2 things. We speak about a balance sheet and an income statement. When we speak about businesses, it's a different conversation, because then you have 2 extra financial statements. You have a cash flow statement and you have a stockholder's equity statement. But here, as a person, you need to have a balance sheet and an income statement. So a personal financial statement is a document or set of documents that outlines a person's or a family's financial position. When you hear the words balance sheet, is the same thing as a statement of financial position or a statement of financial condition. This is the statement that shows you the assets and the liability. Your assets and your total assets, what you own, and your total liabilities, what you owe, your debts, your obligations. And basically, when you deduct your liabilities from your assets, hopefully you get a positive number. And if you do, it's called your net worth. That's what you have in the bank, or that's what you were with. That's what you have if you had to liquidate all of your assets today. So that's for the balance sheet. We're showing you right now on the screen, courtesy of Corporate Finance Institute, a simple balance sheet, and also we have a simple income statement, which is the second set of documents that you need to pay attention to. Okay, so an income statement, aka profit and loss, or P&L, basically shows your revenue and your expenses. So at the end of the month, when you subtract your expenses from your revenue, if you get a positive number, that's called net income, right? But in your case, you're not a business, so we don't speak about net income. We speak about disposable income, money that you can use for other stuff, money you can use to chill, money you can use for chilling, for relaxing, for traveling, for paying off loan, and so on and so forth. If you are lucky enough to have a positive number, in other words, you have extra income, think about allocating part of it to reducing your large personal loan. Very important. And there are a few things you need to make sure that you understand. Please, you want to actually exclude a few things from your balance sheet. For example, a car. If you have a car that is not free and clear, in other words, if you still have a loan on that car, the title is not yours. Same thing for your house. If you have a house that is not fully repaid, you cannot count that in your balance sheet because it's not an asset. Well, if we want to go a little deeper, we can say you can count the portion that you've already repaid. In other words, the portion of the equity you have in the house, or the little equity you have in the car. But that will be stretching things too much. I would just say do not include anything you don't own free and clear in your balance sheet. Step number 3, you want to talk to your current lender. So step number 1, you want to get your numbers right. Number 2, you want to create a personal financial statement. And once you do those 2 things, you will have a clearer idea of what's going on in your life from a financial perspective. Once you have those numbers, you need to contact your lender. You can contact the lender, one lender or two or three or four. You just need to have a strategy, okay? You want to explain your situation. A lot of folks, have you ever heard of the term hardship letter for a loan modification? I'm sure you did, right? Now, you're probably thinking, this is a term that I hear only in the mortgage situation. In other words, when I can't repay and I want to save my house, or the bank's house for that matter, I'm sending a hardship letter for loan modification to the lender. But guess what? You can use the same letter for everyday loans. That letter is not exclusive. It is not exclusive to the mortgage realm. No, you can use that for every other personal loan that you have. What I'm trying to tell you here is to write a letter to your lender or lenders where you basically are looking for a loan modification. If you're going through tough times, if you are having some financial difficulty, you want to state that. You want to state what type of workout plan you are seeking. You need to explain special hardship circumstances. You need to explain what caused you to fall behind in the first place, and you need to explain your plan for getting payments back on track once you are okay. I'm just giving you options here. I'm giving you ideas. I'm helping you expand your analytical realm to see things through the normal day-to-day and to actually think outside the box. Okay? And in that letter, you can write things. Make sure the letter is sent with a delivery confirmation. Okay, you can speak on the phone. That's fine. You can call them. You can email, but you need to have a letter. You want to make sure somebody signs that they have received that letter. Okay, because if you have a big bank or you have a big lender, they probably have thousands of people working for them, or you're probably calling someone out of the country. But you want to have someone who signed the paperwork here in the country. All right, and in that letter you can ask for a loan payment reprieve. You can ask for an APR reduction. You can discuss debt restructuring with the lender. Here, you don't have to go through a third party. You're talking to the lender, mano a mano, if you will. And so this is the kind of stuff you need to do, but you have to do it. You have to be prepared while doing it. And the ultimate goal here is what? To pay off a large personal loan of yours. If you have low income, no job, or your steady paycheck, you want to maybe bring down the 800 monthly payments to 600 monthly payments or 500 monthly payments. Obviously, you might say, well, you know what, this will have consequences on my credit score. Not necessarily. I'm not asking you to file for bankruptcy. I'm not asking you to ask for loan forgiveness. Those are elements. Those are criteria that will actually hit your credit score. But if you negotiate with the lender, if you're honest with the lender will understand. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. We are still having a convo today about how to pay off a large personal loan with a low income or no job or no steady paycheck. Step number 1, get your numbers right. Number 2, create a personal financial statement. Number 3, you want to talk to your current lender or lenders. Step number 4, you want to seek help. Very critical. Don't go this alone. Don't do this alone. No, my friend, don't do this. You want to think about options when it comes to seeking help. For example, you can refinance the loan, right? You can do balance transfer. You can apply for a low refinance loan. You can talk to a lender or to a credit card companies. From time to time, we all receive in our mail balance transfer offers that says 18 months, no APR, 0% APR. You may want to think about seizing one of those opportunities, if, of course, it fits your personal situation. You also want to reach out to nonprofit debt consolidation agencies. There are a lot of debt consolidation agencies out there that will help you at a very local level. They're not going to charge you anything. This could be a good avenue to explore. You might want to reach out to, if you have the budget for it, and if the loan is kind of consequential, if the loan is high, I mean $50,000, $75,000, or $100,000, you might want to hire a debt relief company to help you out. Of course, if the pricing is interesting, right? Because the whole idea of hiring a debt relief company is to make sure they are adding value to your situation. They're not taking more than they are adding to your situation. And if you're interested, there are two debt relief companies that we have reviewed on this show: nationaldebtrelief.com and pacificdebt.com. And those are companies that we have reviewed. We believe that they are trustworthy. They have been in the industry for a while now, so they have established a track record, and that's what you want. You want a company that has a track record in the industry. You can also try to get a debt consolidation loan from a credit union. And generally, based on our analysis and based on the opinions of thousands of experts, credit unions usually charge less than traditional lenders. Why? Because those are they generally are nonprofit lenders or nonprofit financial institutions, right? So the APR you might get at a credit union might be cheaper than the APR you would get from a traditional lender. So try to get a debt consolidation loan from a credit union. You can also try, if you have good friends and good family members, you can try to borrow from family and friends to pay off the debts. That way you can pay off your family. Of course, you need to have the proper arrangement, but I don't think the family will charge you maybe the 20% or 30% that the bank is charging you or the alternative lender is charging you. So this is something you might want to think about. I'll be right back right after this. Don't go anywhere. Welcome back, folks. Actually, we shouldn't be taking a break now. We shouldn't be taking a break. So we are just continuing without taking a break. And what I want to do here is that number 5. I want to speak to you about number 5. You need to chart a new course. Let me repeat that. You need to chart a new course. What do I mean by that? You need to bring in the new you. The new you from a financial perspective. Everything from mindset to behavior should be looked over. You want to set a budget. If your goal is to pay off a large personal loan, you got to first change the software in your brain, because that software was what got you in the situation in the first place. Unless, again, I don't know your situation, but unless, again, you got into the whole situation because of something that was beyond your personal will. If not, most of us get into debt because we have, I gave a few reasons at the beginning of this show where you have several reasons where people just get into debt because either they have ignorance, financial ignorance, they don't understand how debt works, or they're just living beyond their means, and so on and so forth. What I'm trying to say here is you need to chart a new course. And we are showing you right now on the screen 2 wonderful, perfect budget snapshots from a Mom's Steak. Janelle at the blog at Mom's Steak, she has been doing fantastic work. I mean, we don't know her personally, but we have been reading her material. Great. It's just impeccable. So the first, you can see on the screen here, the example of a budget. So you want to have income items and expenses items. So you can see the second part of the budget on the screen. Okay, so you don't have to create anything as fancy as this, or anything as complex as this. It can be as simple as 2 lines, 1 line for expenses and 1 line for income, right? But you need to have a budget, and you can use free apps and software to monitor your spending. You don't have to do it yourself. You can even get the free templates on the internet. Okay, you don't have to have a PhD in accounting to actually do a budget. And please, once you have a budget, please, as part of the new you need to pay yourself first. Whatever you get, any cash, any revenue, even if you have no steady paycheck, you probably receive a paycheck from time to time. When you receive one, you want to basically pay yourself first. You want to create a rainy day fund, an emergency fund. Okay, you want to ditch the bad spending habits, things like impulse buying. This is kind of stuff you need to just forget about, right? Because we're trying to really establish the new you, and the new you should actually forget about the old you. You also need to get an accountability buddy. It's a lot easier, according to research and our own research also, it's a lot easier to reach your goals when you have somebody to kind of, work with you in that journey. So if you can find someone in your entourage who has the same goal, the same vision as you, you can have an accountability feedback loop. That will be fantastic, both for you and for him or her. Step number 6, folks. You got to think about increasing your income. Very important. I've been talking to you about reducing your expenses. That's important, but you can reduce your expenses. But if you want to pay off a large personal loan and you have low income or no job or a steady job, you better come up with that extra cash. I don't care how you find it, as long as you find it in a legit way. You find it in a legal way, that's fine. But you need to think about that. You need to think about generating extra income. And there are a couple of ways you can do this. You can get a second job, right? If you have a 9 to 5, you probably have a few extra hours after work or on the weekends where you can just allocate that. If you don't have a full-time job, that means you have more hours, more free hours that you can focus on, you can use to look for a new job or a second job. You can try to get a side gig. You know, we live in an era where there are so many opportunities, online, offline, in the neighborhood. You can be a babysitter, you can be a dog sitter, whatever it is, a pet sitter. There are so many opportunities. You just got to get out there and just get some work done, right? It's all about getting a side gig. The idea here is to start seeing an uptick in your balance, in your bank balance, in your bank account. Explore passive income opportunities, right? Why not? So that when you're sleeping, your money is working for you. Your money is earning money for you. Passive income opportunities range from investments to, here we can talk about the whole gamut. We have covered this topic on another show, but passive income can be anything. Anything that makes you earn money while you're not working hard is considered passive income. So those opportunities range from investments to creating a YouTube channel, for example, where you just once you're monetized, you can be making money while sleeping. You can consider tutoring. Do you have expertise in anything? I'm sure you do. Everybody does. I'm sure you have expertise in something, and you can actually put that to use and generate some cash from that. So consider tutoring, for example. You also need to beef up your networking. Professional networking is very important, not just from the perspective of knowing new people, but it's also in terms of getting jobs. Hearing about job opportunities, hearing about business opportunities, hearing about investment opportunities. Remember, all humans, we are all social animals. You need to talk to people. You can't be just introvert and expect things to happen to you. You got to get out there, cultivate relationships, make contacts. You can start by volunteering. You can participate in community events. That way you start to know people, and that will help you actually increase your income because, as I said, you'll be hearing about opportunities that you wouldn't have heard about had you been in your little corner. Okay, so get out there and start making friends if you currently don't have any friends. All right, folks, this is it for today's conversation. I was just having a quick convo with you about how to pay off a large personal loan with low income or with no job or steady paycheck. And so here is the step-by-step. First, you need to get your numbers right. Number 2, you need to create a personal financial statement. Number 3, you need to talk to your current lender or lenders. Number 4, you want to seek help. Number 5, you want to chart a new course. And number 6, you want to increase your income. Thank you so much for your attention. I really appreciate it. I will speak to you another time. But until then, remember, stay marvelous.